Oh, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon. Welcome to GrainTV. My name's Cody Bills. Today is Friday, the 5th, for the weekly wrap-up. Let's turn over to the grain hedge trading platforms. Here we closed off the day. Corn trading down 2 3/4 cents. Soybeans down 8 cents. And wheat in Chicago here down 6.5 cents on the day. Now, one thing that did influence the grains today is the fact that the U.S. dollar rallied. Now, we had nice non-farm payrolls numbers out this morning showing 280,000 jobs were created in the month of May. That was above analyst expectations, which were looking for 225,000. That's a positive piece of news, positive for the economy. That helps raise the dollar. When the U.S. dollar moves higher here, it puts pressure on commodities in general, hurting our competitiveness on the global market. So that's one of the reasons why we had a little bit of selling pressure here today. I think one of the other reasons why we had a little bit of selling pressure is we've been rallying all week. Corn, soybeans, and wheat all were trading positive on the week going into Thursday. And so I think what we saw is maybe some positions come off the table as we go into the weekend. Also, let's talk a little bit about wheat, because this has been a very interesting commodity, been very volatile recently, been kind of chopping around, still maintaining a downtrend. But one thing you'll notice is today, the bar on the very far right, that's 1 day worth of price activity. That was today's price activity. You'll notice we moved above the highs that were printed back there in April. Now, that is something that we need to pay close attention to, because though we broke it, it did act as resistance. That was something that was expected. We talked about that in our morning commentary. That area is a little bit of resistance. I wouldn't be surprised next week if we just kind of chop around in between that 100-day moving average and the resistance, the high that we printed up there today. So I think that's going to be interesting to pay close attention to. The wheat market, though, there seems to be plenty of global stocks. It is a market here where we do see a little bit of short covering. There's concerns about monsoon being lighter than expected in India. That, of course, would influence wheat. That would influence corn, influence soybeans. Now, India isn't a major exporter, but they do grow a significant amount of grain. And so if they had a bad crop this year, that would definitely impact the global supply and demand balance sheet. So those are things that we want to pay close attention to. Of course, Eastern Europe and parts of Russia, a little bit dry. That's something we're also going to want to pay attention to. So there is some news out there that we're going to want to pay close attention to that could develop into a situation where we get a little bit of a movement higher here. But in general right now, there seems to be ample global supplies. Winter wheat harvest is kicking off down in Texas. It seems as though for the most part there hasn't been a ton of negative news just yet. We're going to be paying close attention to that next week as well. Let's turn our attention over to expectations here for ending stocks in the WASDE report released out on the 10th here, next Wednesday. Analyst expectations in a Reuters poll show that people are looking for corn to increase by 8 million bushels here in that June report from where we were at in May. Now that would bring us up to 1.859 billion bushels. Soybeans are expected to decline by 11 million bushels, so that would bring us to 339 million bushel carry out there. That's down from 350 million bushels. I think that's going to have a lot to do with the fact that they're most likely going to have to raise export sales. We've just had phenomenal export sales in the second half of the marketing year, something that we typically wouldn't see when you look at the seasonality of exports. So I think I wouldn't be surprised to see soybean ending stocks move lower here. Analysts on average are expecting it to move down to 339 million bushels. Wheat is looking for about a 19 million bushel increase in ending stocks for old crop, going from 779 million bushels to 798. Now let's talk a little bit about new crop. Here we have new crop expectations. Basically, analysts are looking for corn and wheat both to increase also, and soybeans to decline by about 13 million bushels. But 487 million bushel carryout here for 15-16 crop is still a significant carryout. That's still a little bit bearish there. Just because we moved down by 13 million bushels potentially, at least just because the analysts are expecting it to move down, doesn't mean that this new crop soybean equation here is really all that bullish. So those are things we're going to want to be paying close attention to going into next week, because that's really what the trade is going to be looking at and preparing for on Wednesday. Let's turn our attention over to the cash market report. You'll notice here when you look at the soybean and the corn maps, corn was unchanged. Now we did get a 3-cent decline in basis here at the Gulf. River terminals declined 3 cents, but ethanol was unchanged. So on average across the U.S., we ended up seeing an unchanged basis. That really, I think what we're seeing there is really just elevators, merchandisers not having to bid up corn at all, because we've had this rally, and that will draw some grain out of the bins. When you look at soybeans, a little bit different scenario here. You'll notice soybeans up 2 cents on the week. Soy plants were really what led the charge. You'll notice soy plants improved 4 cents on the week. In the East Coast, that's where we saw the most aggressive moves higher there in basis. In the East, we saw moves higher in soybean basis by as much as 5 to 15 cents. Basically, what we're seeing there is a scarcity of that crop, a scarcity of the supply of old crop, and they're having to bid up soybeans to pull it from Ohio and Indiana. Gulf here was down 2 cents, River down 1 cent, so the export market doesn't seem to be helping things a whole lot. In general, though, soybeans up 2 cents on the week, even after closing the week a little bit higher here and having a relatively positive week when you look at overall price action. Guys, that wraps up today's show. If you have any questions about what we talked about today, please give us a call. The number is 877-472-4607. Remember, if you haven't done so already, take a demo. Take a demo of that 14-day free trial that we have at grainhedge.com. See what it's like to have live quotes in the palm of your hand, be able to monitor your positions, and execute orders from the field wherever you have service. It is a powerful marketing tool, and it helps you stay on top of the market when it's moving, when volatility is introduced back into the market. It certainly is one of those tools that's very valuable there for producers, especially producers that have a plan, that are waiting for opportunities to unfold so they can execute price hedges. This is a great tool for that. So guys, if you haven't done so already, go ahead, take a demo, put your name in there. We'll be in touch, and we'll make sure that you get the custom one-on-one walkthrough of the platform so you get the most out of that 14-day free trial. Thanks a lot for tuning in. We'll see you here on Monday next week.